Why do the most profitable traders sound like they don't care about being right? Here's what Robert Greene understood about power that Wall Street legends applied to the markets. Uncertainty isn't your enemy, it's your weapon. While amateur traders obsess over predicting the next move, the pros operate on a completely different paradigm. They've cracked a code hidden in plain sight, one that transforms chaos into systematic profit. What if I told you the secret isn't in eliminating uncertainty, but in weaponizing it? What you're about to discover will flip everything you thought you knew about trading success upside down. If you're building a trading edge that survives any market condition, the most powerful secret comes from an unexpected place. Robert Greene's laws of power applied to probability thinking. Here's the paradox that destroys 90% of retail traders. They enter the market seeking certainty in a domain where certainty doesn't exist. They analyze charts for hours, backtesting systems obsessively, searching for that holy grail setup that never fails. This is the first trap. Robert Greene wrote in the 48 Laws of Power about the law of unpredictability, how masters of strategy never allow themselves to be fully known or predicted. But here's what Greene couldn't have anticipated. Traders who try to predict the market are violating this law in reverse. They're demanding certainty from an entity that, by nature, thrives on randomness. Mark Douglas, in Trading in the Zone, identified this as the fundamental error. Traders confuse a probabilistic edge with guaranteed outcomes. They see 5 winning trades and suddenly believe they've conquered uncertainty. Then comes the inevitable losing streak, and their entire psychological framework collapses. The mystery deepens when you study successful institutional traders. When interviewed, they use strange language. They say things like, "I have no idea where price is going next," or "Any trade could be a loser." Yet somehow they're consistently profitable year after year. How can not knowing be superior to knowing? This contradiction isn't just philosophical. It's the difference between accounts that grow systematically and accounts that blow up repeatedly. The amateur seeks certainty as protection. The professional seeks probability as power. But why does this distinction create such dramatically different results? Here's the psychological revelation that changes everything. Your brain is wired for survival in predictable environments, but financial markets are fundamentally non-linear systems. You're bringing Stone Age neurology to a quantum mechanics problem. Douglas identified what he called the 5 fundamental truths of trading. The first truth is devastating in its simplicity. Anything can happen. Not anything can happen sometimes, anything can happen always. Every single trade. No exceptions. An earnings report beats expectations and the stock crashes. A recession is announced and markets rally. The setup that worked 47 times in a row fails on trade 48. Now here's where Robert Greene's strategic thinking intersects perfectly. Greene teaches that true power comes from accepting the chaos of human nature, rather than trying to control it. He studies historical figures who thrived in uncertainty. They didn't eliminate unpredictability. They built systems that were anti-fragile to it. The neurological mechanism at play involves your amygdala, the ancient fear center of your brain. Denise Shull in Market Mind Games explains that when you need certainty, your amygdala treats every uncertain trade as a threat to survival. This triggers fight or flight responses. Your cortisol spikes. Your prefrontal cortex, responsible for rational decision-making, gets partially shut down. This is why traders who can't accept uncertainty make catastrophic errors. They exit winning trades too early, seeking the certainty of a realized gain. Hold losing trades too long, refusing to accept the certain loss. Revenge trade after losses, trying to forcefully impose certainty on chaos. And over-leverage when confident, confusing a probable edge with a guaranteed outcome. But professional traders, they've rewired this response. They've internalized Douglas's probability mindset so deeply that uncertainty no longer triggers threat responses. Each trade becomes a statistical iteration in a probability distribution. The outcome of this trade becomes irrelevant. Only the edge over thousands of trades matters. An analysis suggests this is why institutional traders can lose $100,000 on Monday and execute their system flawlessly on Tuesday. They've decoupled individual outcomes from systematic thinking. Let me simplify this with a powerful analogy. Think of a casino. The casino doesn't know if the next person at the roulette table will win or lose. They have absolutely no certainty about the next spin, yet they're guaranteed to be profitable long-term. Why? Because they think in probability, not outcomes. The casino doesn't care about individual spins. They care about the mathematical edge over 10,000 spins. A winning trader operates exactly the same way. You're not trying to win this trade. You're executing a statistical edge over your next 200 trades. The individual trade is meaningless. The pattern over time is everything. Here's the liberating truth. Once you genuinely accept that any single trade is random, you stop emotional trading. There's nothing to fear in uncertainty when you're playing a probability game. That's only when you need certainty that uncertainty becomes painful. Douglas called this thinking like a professional. Greene would call it strategic detachment. Same principle, different domain. You cannot control the outcome, so you stop trying. You control the process, execute with discipline, and trust the statistics over time. If this is blowing your mind, stop right now and hit the subscribe button. Why? Because what comes next will blow up your view on trading psychology and probability thinking. And if you don't subscribe, the algorithm will hide my next secrets from you. Now that you understand uncertainty can't be eliminated, here's the next layer that separates consistent winners from boom-bust traders. Why do traders who accept uncertainty still fail? You'd think that understanding anything can happen would be enough. But watch what happens in real time. A trader intellectually accepts probability thinking, studies Mark Douglas religiously, nods along to every concept, and then risks 10% of their account on the next setup because this one looks really good. This is what Brett Steenbarger, in The Psychology of Trading, calls the knowing-doing gap. You know you should think probabilistically. You do keep treating trades as individual predictions. The gap between knowledge and execution destroys more accounts than any technical strategy ever could. Here's the mystery Greene would recognize immediately. It's the same pattern he documents in Power Dynamics. People say they want one thing, but their behavior reveals they want something else entirely. Traders say they want consistent profits. Their behavior reveals they want to be right about market predictions. These are not the same goal. When you dig deeper, you find something unsettling. Most traders aren't actually trying to make money through probability. They're trying to validate their intelligence through prediction. Being right feeds the ego. Consistent execution doesn't. This creates a hidden sabotage pattern. The data is stark. Studies of retail trading accounts show that traders with 65% win rates often end up break-even or negative, while traders with 45% win rates can be highly profitable. The difference? Position sizing, risk management, and psychological discipline. All functions of truly accepting uncertainty, not just claiming to accept it. So the mystery becomes, how do you bridge the gap between intellectual understanding and behavioral execution? How do you move from knowing uncertainty is unavoidable to acting as if uncertainty is unavoidable? The revelation here exposes an uncomfortable truth. Accepting uncertainty intellectually is step one. Accepting it emotionally and behaviorally requires rewiring your identity as a trader. Mark Douglas discovered this through decades of coaching. Traders maintain a hidden scoreboard. Consciously, they're tracking P&L. Subconsciously, they're tracking times I was right versus times I was wrong. This second scoreboard is what destroys them. Every losing trade, even a well-executed one following the plan, registers as a failure of prediction rather than a statistical iteration. It is possible to interpret this as an identity crisis. Your sense of self-worth becomes entangled with market outcomes. When the market moves against you, it's not just money lost. It's an indictment of your intelligence, your analysis, your worth as a trader. This is why smart people often make terrible traders. Their intelligence becomes a liability because they need to be right. So here's the full picture. Robert Greene's law of uncertainty isn't about eliminating unpredictability. It's about building power through unpredictability. Mark Douglas showed how this applies to trading. Accept that anything can happen on any trade, decouple your identity from outcomes, and build unshakable confidence in your process over sufficient iterations. The chaos isn't your enemy. Your need for certainty is. Master traders don't predict better. They respond better. They've weaponized uncertainty itself. If these secrets blew your mind, you need to see my next videos. but only if you hit the bell icon. Otherwise, you'll lose the most powerful secrets in history. What is your opinion on the ideas presented in this content? Leave it in the comments. Send this news to that friend of yours who has a keen perception. This content is strictly educational and analytical and does not constitute financial advice or investment recommendations. So here's the full picture. Robert Greene's law of uncertainty isn't about eliminating unpredictability, it's about building power through unpredictability. Mark Douglas showed how this applies to trading. Accept that anything can happen on any trade, decouple your identity from outcomes, and build unshakable confidence in your process over sufficient iterations. The chaos isn't your enemy. Your need for certainty is. Master traders don't predict better, they respond better. They've weaponized uncertainty itself. If these secrets blew your mind, you need to see my next videos, but only if you hit the bell icon. Otherwise, you'll lose the most powerful secrets in history. What is your opinion on the ideas presented in this content? Leave it in the comments. Send this news to that friend of yours who has a keen perception. This content is strictly educational and analytical and does not constitute financial advice or investment recommendations.